Hey, my name is Andrew, and I'm going to talk a little bit about workers' compensation policies. How much does it cost, and how does the audit process work? Workers' comp insurance is required for every single business out there that has an employee. It's required by law. These policies can often be a significant expense for your business, so we're going to try to give you some tips to save you a little bit of money. Basically, when you're applying for workers' compensation insurance for the first time, you want to make sure that you have the classifications on the policy set up correctly. If you're a roofing company, you're going to have a roofing contractor classification. If you're a mechanic shop, you're going to have the auto repair classification. And if you're a restaurant, you're going to have a restaurant classification. Some businesses might have multiple different classifications on their policy, and it's important that you have a way of tracking your payroll. The reason that you need to track your payroll is because how much that you're going to spend on workers' comp insurance is directly related to the amount of payroll that you have in your business. The insurance company charges you a premium for every $100 of payroll that you have. So for example, if you have $1,000 of payroll, you divide that by, or let's say you have, hopefully you have more than $1,000 of payroll. If you have $100,000 of payroll, you divide that by 100 and you multiply that by the rate for the class code, and that gives you the basic premium. And at the beginning of the policy term, the insurance company asks you to provide an estimate for what your payroll is going to be for the upcoming year. And they're going to charge you premium throughout the year based on that estimate that you give them. At the end of the policy, the insurance company is going to conduct an audit. And they're going to ask you to provide them with payroll records over the previous year to determine if the payroll estimate that you had on your policy was too high or too low. And if that is the case, you're going to get a refund or you're going to owe additional premium. Again, the audit occurs after the policy has expired. When it comes time to conduct that audit, the insurance company will reach out to you and they're going to ask you for information such as your payroll records. It could be quarterly employee tax reports. They're going to ask you for a description of the type of work that these employees are doing. And if you had $100,000 estimated for the policy, but you actually had $120,000 of payroll for the year, you're going to have to pay them additional money for that prior policy term. The other case is true as well. If you only had $80,000 of payroll but estimated was at 100, you're going to get a refund from the insurance company. This is an example of what a policy declaration looks like for a workers' comp policy. You can see here that we have two different classifications on this policy. One of them is for office workers only. Here's the estimated payroll, and then you have the rate per $100 of payroll. This business also has a carpentry classification, so clearly they're a carpentry business and they have $50,000 of payroll. And then you can see how that calculates out to give you the subtotal. In addition to the subtotal there, you see that there are some other charges such as fees that are applied to the policy, or state taxes maybe. You have an experience modification, which is based on your prior claims experience, and then you have sometimes what's called a schedule modification, which sometimes can be sort of a negotiated discount or additional premium, or it could be the insurance company having to do something to collect additional premium. There's a few things that you have to be aware of to make sure that you're getting the best deal. Oftentimes we see employees and payroll misclassified, and this can be very expensive, especially if it happens year after year. If you can get the correct classification on your policy, that will save you money in the long term. Overtime, if you have employees that make overtime, you need to make sure that the total payroll amount reflects an adjustment for overtime. The insurance company doesn't charge you additional premium just because you have employees getting paid a higher rate at overtime. Whether or not the owners of the business are included in the coverage or not, they have the option. You would, in an example where the owner is not included, in the coverage, you would want to make sure that their payroll is not included in the overall exposure on the policy. And then in the experience modification, which is the claims history over the last 4 years, essentially. If you want to learn more about the experience mod, you can watch our other YouTube video. If you are a business that has employees, then you need workers' compensation insurance. If you're interested in more information, feel free to visit our website, briggsagency.com. Hope you enjoyed the video.